How is risk tolerance measured? It is not an exact science. There are tests that measure risk tolerance to assess how an investor reacts to different types of risk. These tests aren't foolproof, of course, since we are talking about psychological behaviors that can vary under different conditions. However, these tests are designed to give you a general sense of how much investment risk you can accept, and the results are generally considered reliable. Generally, risk tolerance tests fall into two categories: investment preference tests and psychological tests. Investment preference tests. Typically, an investment preference test is a questionnaire that addresses preferences for selected investment vehicles. It asks questions about your current financial situation, goals, and past investment experience. This type of test is easy to construct and relatively simple. The disadvantage, though, it does not accurately gauge risk-taking propensity because it does not deal with emotional reactions to risk. Psychological test. A psychological test is a more elaborate questionnaire that attempts to gauge an investor's attitude towards risk. This type of test generally includes questions about your feelings or behavior, or it may ask you to respond to hypothetical situations. This method of testing is easy to administer and can actually be fun to take. The disadvantage is that people often like to consider themselves risk takers and may not respond as accurately as they should, only to find out that during their first market downturn that they are more risk averse than they had originally thought. Only you can know what your level of risk tolerance is when it comes to investing. Here are some questions to ask yourself. When do you plan to take withdrawals of principal from your portfolio? In 3 to 5 years, in 6 to 10 years, in 11 to 15 years, or after more than 15 years? What is your age? Over 65, 55 to 64, 35 to 54, or under 35? When making a long-term investment, you plan to hold on 1 to 2 years, 3 to 4 years, 5 to 8 years, or 9+ years. In October of 1987, stocks fell by more than 20% in one day. If you owned an investment that fell 20% over a short period, what would you do? Sell all the remaining investments? Sell a portion of the remaining investment? Hold on to the remaining investment and sell nothing? Or buy more of the investment? Do you agree or disagree with this statement? Generally, you prefer an investment with little or no fluctuation in value, and you're willing to accept the lower returns associated with these investments. Do you strongly agree, somewhat agree, or disagree? Do you agree or disagree with the statement? During periods of market decline, you tend to sell some of your riskier assets and put the money into safer assets. Do you strongly agree, somewhat agree, or disagree? How stable are your current and future income sources? Salary, Social Security, pension, very unstable, unstable, somewhat stable, or stable? When it comes to investing in stocks, bonds, or mutual funds, you would describe yourself as a very inexperienced investor, somewhat inexperienced investor, somewhat experienced investor, or experienced investor. How would rising and falling market fluctuations affect you emotionally? Does it dramatically affect you, directly affect you, indirectly affect you, or minimally affect you? Which of these investments would you feel most comfortable owning? Certificate of deposit, U.S. government bonds, stocks of older established companies, or stocks of newer growing companies? How optimistic are you about long-term economic prospects? Pessimistic, unsure, somewhat optimistic, or very optimistic? What do you anticipate your portfolio value will be in 10 years? The same as it is today? A little more than it is today? Moderately greater, or much greater? What is your current income requirements from this portfolio? More than 3%, 2 to 3%, 1 to 2%, or 0 to 1%? If the items you've chosen tend to be to the right, your tolerance for risk may be high. On the other hand, if more of the items you circled are on the left, your tolerance for risk may be low.